A very good morning to all of you and hope you had a very good Holi. Welcome to the live coaching class for CA Intermediate. I am CA Ratima Bhatia and today, as per schedule, we had to take capital gains, but for the time being, for the first part of the class today, we'll be taking profits and gains of business or profession, where we'll be discussing some last provisions, last leg of the provisions where we have audit, maintenance of books, presumptive taxation, and 43CA. So I welcome you all for the class today. So without taking much of your time, let's resume the class today. So in the last class, we left at 43B, where we were discussing about certain types of expenses which are allowed only if they are paid on or before the due date of return filing. Here, one thing student was not told was conversion of interest into loan or borrowing or advance or payable in other manner. So students, here you have this one very particular scenario where you convert your interest on loan, So let's see what does that mean. So when we talk about 43B, I told you interest, if we are talking about interest in PF, banking institutions, NBFC, PFI, state financial corporations, all of these inclusive, the criteria is that the interest should be paid on or before due date of filing. So many times people, what happens is you convert your interest due amount into loans. This interest part itself is converted into loan. So if there is outstanding of 3 lakh rupees ka interest, so what do you go? You go to bank, and more COVID when this has happened a lot also, to convert that part, full interest part, into loan, suppose payable into 7 or 6 EMIs. So EMIs ke hisab se they calculated differently, obviously that is equated. So 50,000 per month. Suppose you have to pay, so instead of paying 3 lakh full outstanding ek saath, you are paying into installment. So what you are paying is, you are paying the interest amount. You are paying the interest amount. Interest amount is what you are paying, correct? So on this 3 lakh, now before due date of filing, obviously what loan installment you have paid, for that year would be considered. So if I take an example here of Hari, an individual carried on the business of purchase and sale of agriculture commodities like paddy, wheat, etc. He borrowed loans from Andhra Pradesh State Financial Corporation and Indian Bank and has not paid interest as detailed under. 15 lakh interest is unpaid for Andhra Bank, 30 lakhs interest is unpaid for Indian Bank. Both APSFC and Indian Bank, while restructuring the loan facilities of Hari during the year 21-22, converted the above interest payable by Hari to them as a loan, repayable into 60 equal installments. During the year ended 31st March 2022, Hari paid 5 installments of this Andhra Pradesh State Financial Corporation and 3 installments to Indian Bank. Hari claimed the entire interest of 45 lakh as an expenditure while computing the income from business of purchase and sale of agriculture commodities. Examine whether his claim is valid. So his claim is not valid because the interest is not paid. Interest is not paid. Full 45 lakh is not paid, and the condition as per 43B is that you have to pay still a full 45 lakh if you need to claim it on or before the due date of return filing. And this has not been the case here. So what will happen? We see how much of the interest which is converted into installments has been paid during the year. So 45 divided by, not 45 divided by 60, 15 divided by 60 and 30 divided by 60 would give us an installment of 25,000 and 50,000 each respectively. But he has paid only 5 of APSFC and Indian Bank ka 3. So 25 into 5 and 50 into 3 respectively. 275 is the total deduction. 275 is the total deduction. So in short, interest converted into loan, how much are the installments paid of that interest would be considered, and full you have to consider, full loan amount you have to consider. Why, students? Because that is the interest divided into various EMIs or various installments. Clear? Rupesh, it's not 75,000 installment. It is 25 and 50. Next, we move to a very, very important concept. This concept, student, is something which is applicable in your capital gain also with different section 50C. It is applicable in your other sources also when you're talking about gifts. So this section becomes really important. First of all, this section's only section 43CA only relates to when we're talking about land or building or both. Land or building or both. Now, what is the relevance of this section? First, we understand that. So, student, what happens is simple sa cheez hai. Think about it. For you are making sale or purchase. So, we have covered situation where you will claim unreasonable expenditure to show lower profits, correct? But there can also be a situation where you show less income, basically less the sale consideration to show of less sale consideration to show less profits. That can also happen, correct? That can also happen. And in case of land and building, this is very prevalent that people obviously take a less amount of consideration in white and show that it has the final consideration and pay taxes on it, correct? So what happened? The government recognized the need of putting a check on such consideration which you are showing. The consideration which you are showing. So first of all, this section, as I just told, is only applicable to land, building, or both. So this is not applicable to any other stock in trade. Now, since we're talking about PGBP, we are thinking it from a point of view that land and building, or the building part is, or the land or building or both are your stock in trade. Are you stock in trade? That means you are a dealer. This is not applicable. This section will not be applicable when you have invested into land and building as a capital asset. That will go to 50C. That will go to 50C. Here it is about 43CA, that means this is your stock in trade, number one. Number two, what you receive is basically the consideration. What you receive is the consideration. But there is another thing also, students, especially in case of land and building, is the stamp duty value. Because whenever you transfer, whenever you sell, transfer from one party to another, you have to register those deeds, right? Those deeds are registered on the stamp duty value as per the registrar. The stamp duty value, basically the value at which you pay the stamp duty. Okay, so this is what stamp duty value means. So the government has kept a check that in no situation your stamp duty value should be less than consideration. Should be less than consideration. They say that if your consideration is suppose 100 lakhs and stamp duty value is 150 lakhs, then in that case 150 lakh would be your deemed consideration. 150 lakh would be your deemed consideration. Then you have to take in your PGBP 150 lakh, not 100. You are claiming to your actual consideration to be 100, but the stamp duty value says that the stamp duty value is 150 lakh. That means you, in a very typical situation, it might happen that you are selling it at a very loss, but otherwise it is not possible. Stamp duty value is the minimum amount at which the sale takes place. So that's why whatever the stamp duty value would be your deemed consideration. That means you will now calculate the profit taking that consideration instead of 100. Clear? But yes, having said that, government also recognize that it cannot always happen that you are exactly meeting the stamp duty value. There can be a difference of lakh or two or so on, or there can be an actual problem which you can face, and hence stamp duty value can be higher than actual consideration. So the government gave a range of 10%. The government gave a range of 10% that, okay, if your stamp duty value is within 10% of 110%, basically 10% plus 100% of actual consideration. That means the difference between the actual consideration and stamp duty value is just 10%. Then in that case, you take actual consideration as your then you take actual consideration as your final consideration and pay tax on it. But if your stamp duty value is more than or the difference between the stamp duty value and the actual consideration is more than 10%, then you have to take stamp duty value as the deemed consideration. Clear? So they have given a range of 10%. So in this scenario, if the stamp duty value is 105 lakhs, but 10% the bracket is given to me, so it would 10% of bracket comes to 110 lakhs. So my stamp duty value is coming within 110 lakhs. That means I will not take 105, I will take 100 only as my consideration. But if, just like this 150 lakh scenario, 10% is obviously crossing 150 lakhs is obviously crossing the 110% of the actual consideration. That's why 150 lakhs would be my deemed consideration. 10% or 110% has to be done of this, the actual consideration to compare. Clear? But obviously, again, you said, ma'am, COVID mein the things are very adverse. People have sold the property at a very cheap rate, correct? They have. So for a particular period, our finance minister has made this relief of 10%. Have made this relief of 10%, that is 110% to 120%. So first, you need to understand the general concept, which is 110% ka range, but only for this proposed period, which is from 12th November 2020 to 30th June 2021. Only for this proposed period, the government has said that in case of a residential unit, first when you have been first time allotted a residential unit, and if you're transferring it, sorry, the transfer is made by the first time allotment of the residential unit, and it has happened between this period and the consideration received from such transfer is 2 crores or less, then in that case, instead of instead of 10%, the range would become 120%. So the period, if you have to remember, is 12th November 2020 to 30th June 2021. सिर्फ इस टाइम में अगर any sale happen, if during this time a sale of a residential unit happens, so we are not talking about any commercial property, we're talking about the residential unit, then this term of 110 would be considered as 120 to see the difference. So now if in this case we talk about 100 lakhs ka actual consideration and stamp duty value is 116 lakhs and the sale has happened in this period, what would be your consideration which you will take for calculating the profits? 100 or 116 or 120? The answer is 100 because the stamp duty value is within 20% range. Then in that case, the main consideration remains to calculate the profit. If this would have been 126, then my actual consideration, if my stamp duty value would have been 126 lakhs, then what would be my deemed consideration? 127 6 lakhs because this is crossing the 20% का range benefit given. Clear? Acha, one thing students in this concept which you have to remember is the stamp duty value has to be taken for which date. There are two dates, students, generally in question. One is the date of agreement. Another is the date of registration. Agreement is when we both as a party decide that okay, you will sell the property at so and so date, and I will purchase the property in so and so date, and we make an agreement out of it. Okay, that is the date of agreement. Date of registration, which is like just forming a sale deed. So date of registration is when you actually go to the registrar office. When you actually go to the registrar office to get the registration done, that is date of registration. But there had been a considerable, these 2 points were of great consideration when COVID happened. Many deeds which were finalized, say suppose on 22nd of March or before suppose on 12th March 2020, the date of agreement was finalized, everything was done, sale deed was done. But due to coronavirus, the offices got shut and you only could get the registration done somewhere on 30th June 2021. These things happen, correct? Now, there is a difference between date of agreement and date of registration. The question comes, which stamp duty value has to be taken, whether the stamp duty value on date of agreement or whether the stamp duty value on date of registration, because sometimes the registration is pushed forward because you have to take time and all those stuff. So the registration is pushed forward because of uncontrollable circumstances, and the date can differ. The date can differ. It can be agreement date or the registration date. So you have to ask yourself that which date has to be taken. So this part is very simple. If on the date of agreement, consideration or part of the consideration, if on or before the date of agreement, consideration or part of the consideration is received by account pay check, account pay bank draft, electronic link system or other prescribed mode, then you will take date of agreement. Otherwise, you will take date of registration. So if you have received consideration in cash, then you will take date of registration. If you have received consideration in account pay check, then you will take the date of agreement. If you have not received any consideration on date of agreement, then you will take date of registration. Some consideration or part of consideration or the whole consideration has to be received on or before the due date of agreement in the specific modes. Otherwise, you will take date of registration ka stamp duty value. Otherwise, you will take date of registration ka stamp duty value. Is it clear? So, basis this, let's do question, and I hope you will get more clarity. So these are various scenarios which are covered in our module, and I think these are self-sufficient to explain which date has to be taken or which consideration has to be received. So the final difference between the actual consideration and the stamp duty value, whatever the winner is called full value of consideration to be considered for calculating profits. Okay, the term uses full value of consideration. So now let's see, we have to see truly between these 3 columns and obviously the date column to come to full value of consideration. If you will see the answer direct, you will not understand it. Okay. So now our actual consideration is 100 lakhs. Okay. 10 lakhs is received by account pay check on 1st July 2021. The date of transfer. The date of transfer is 1st September 2021. Date of agreement was 1st July 2021, where the stamp duty value is 120 lakh. Date of registration 1st September 2021, where the stamp duty value was 130 lakhs. Now a question comes that what consideration has to be taken in mind? What consideration has to be taken in mind? What is my full value of consideration? First, you need to pick whether you have to take this stamp duty value to compare or you have to take this stamp duty value to compare. Which stamp duty you have to pick? For that, you have to see whether some consideration was received on or before due date or not. If yes, then what was the mode? Consideration was received. We are not consider whether the full consideration was received or not, we have to consider whether part of it, even as small as 10 lakhs in this case, is received and in what form. So 10 lakhs is received by account pay check. That means we have to consider stamp duty value on date of agreement only. So date of agreement, the stamp duty value is 120. Now let's compare it with actual consideration. How much difference is allowed? 10%, which is 110. Obviously, the stamp duty value is crossing 110. So my full value of consideration would be 120. Clear? Now let's take example 10. Here, same things are given. This is stamp duty value on agreement date. This is stamp duty value on registration date. This is my actual consideration. First, pick which stamp duty value you have to pick to compare. I have to pick the stamp duty value on date of registration. Why? Because 10 lakhs, even though received on or before due date, are received by cash. So this stamp duty value becomes immaterial. Now we have to compare between this and this. And if this falls within 10%, that would be my, then actual consideration would be my full value of consideration. If not, then stamp duty value. So hence, this stamp duty value is my full value of consideration. I give you a moment to go through all the examples and then we'll proceed forward. Stamp duty is the duty which you are paying. Stamp duty value is the value on which you pay the stamp duty. Stamp duty has a percentage, but percentage of what is what the stamp duty value is. Vrinda, in your example, we are talking about actual consideration between 116 lakhs and stamp duty value as 150. 110% of actual consideration would be 127, which obviously is crossing my 10% bracket. So stamp duty value would be my actual deemed value, full value of consideration. Siddharth, I'll try to cover the syllabus. If in case it doesn't happen, then we have to take extra class, that we see. No, depreciation is not applicable for backward sales for May 22. Nidhi, is that 43CA clear? So I move forward to example 12. First May 2021. Immediately you have to remember the period between November 2020 to 30 June 2021. And in your case, the first 3 months are following. So you have to be very, very, very attentive. So first May 2021, the transfer of a residential unit has happened by a first time allotment. Okay, first time allotment means the first time buyer. Here what has happened is the consideration is 150 lakhs. Date of agreement की date में stamp duty value is 180. Date of registration में stamp duty value is 185. Okay. Now we have to see what stamp duty value has to be considered first. The stamp duty value which has to be considered first depends upon this. 50% of the amount is received by account pay check on the date of agreement. That means some consideration has been received and that has been received by account pay check. That means this stamp duty value has to be considered. Sabse pehle, this is clear? Yes. Now we have to come back on a transfer date. Transfer date is 1st May 2021, which falls within the 3 months leverage period which is given, which is instead of 110%, we have to compare it with 120%. We have to compare it with 120%. Now 120% को compare करने के लिए transfer is met. The date of transfer is met, What is not met? What is other condition which have to be seen? The transfer of residential unit by first time allotment, that is also met. What is the third condition we have to see is that the consideration is less than 2 crores, which is also the case. So now we can apply 120% to compare it. So 150 lakh ka 120% is 180, is 180, which is my stamp duty value. That means my actual consideration ka 120% is within that 180, is within that 180. So I will take actual consideration as my full value of consideration. Clear? The moment it is less than 180, the moment the stamp duty value is 181, then I will consider 181 as my full value of consideration. Now, this understanding, do this example, please. Sandeep, is it clear? Part 11% का point नहीं है, compare it with 110%. If it is within 110% or even on 110%, actual consideration would be full value of consideration. If not, then stamp duty value would be the full value of consideration. So for me, the only tarika to do the question is first take which stamp duty value you have to take. For that stamp duty value, see whether the consideration has been received or not. Keep that stamp duty value aside, then see whether as per your scenario you have to take 120% or 110%. Once the date of transfer and 2 crore consideration is met, you have to take 120%, otherwise you have to take 110%. Now compare that 110% with the actual consideration of stamp duty value which you took. If it is within that limit, actual consideration is my full value of consideration. If not, then stamp duty value is my full value of consideration. If this gets clear, student, this same concept applies under different head in capital gain is 50C, is 50C. So if you understand it here, you will not face an issue there. Clear ho gaya? Sure. Good. Next are my few very important section 44AA, 44AB, 44AD, and 44ADA and 44AE. Now let's begin our understanding with 44AD first, presumptive taxation, and then we move back to the two governing provisions of maintenance of books and audits. Okay. Now, what is this section about? Presumptive taxation. Presumptive word kya hota hai? What is presumptive? When I presume something, when I presume something or assume something that okay, this is what it is. So this section was introduced to reduce the burden of compliances. One second. Yeah, so this section was introduced to reduce the burden of compliances. Burden of compliances on whom? Students, abhi tak, if you think, you will see that PGBP is such a cumbersome process. You have to maintain books of accounts, and after that, you have to do all this add list wala thing to come to profit. So if anyone who is not a CA, how will he have the knowledge of such a things up? And business in India starts at a very ground level. So any person who's working at a ground level or having a small turnover, or even we see small vendors, so many small vendors around or are part of it, it becomes very difficult for him. For him, if he needs the guidance to do so, he has to take some CA who will because to claim such expenditures, you have to maintain book, you have to see whether the payment was made in cash or not, whether the TDS was deducted or not. So many things have to be taken care of, right? So the government introduced the concept of presumptive taxation, where a person can declare the profit at a flat rate. A person can declare the profit at a flat rate without being worrying about all the expenditure which he has done or not, or all the expenditure which is allowed or not. He can or she can claim the total net taxable profit for the PGBP income at a flat rate. At a flat rate of what we'll discuss, but this is what presumptive taxation is. So when I'm saying again and again, if it means that he just do not have to do anything, he just have to pick the total sales for the year, uska ek percentage he will put, and that would be my PGBP ka income. So abhi tak jo pada in all these three classes would be of no use, except depreciation would be of no use except depreciation. I'll come why. So flat rate. So let's see first of all on whom such presumptive taxation applies. Presumptive taxation ke there are many sections, but at your level only 3 sections are applicable. 44 AD, very important. 44 ADA, also important. And 44 AE, because this section may you get a question generally. So let's start our understanding with 44 ADA. First of all, on whom such section is applicable or who can claim the benefit of presumptive taxation. First of all, this is applicable for an SSE who is into business. We're not talking about SSEs who are into profession. We're not talking about doctors, artists. No, we're talking about SSEs who are into business, because this is presumptive taxation of business income, not professional income. Okay? Then it is applicable on resident. Resident may be only individual HUF firm. Individual HUF firm, not LLP. Not LLP ko na please mark it in bold, highlight it, whatever, because abhi tak where you have read firm and LLP both together. Even 40B ke liye when we were seeing 40 clause B, firm and LLP all were included because the treatment is almost same. But in this scenario, it is not applicable on LLP but only on firm. Third thing is what kind of business are allowed? All types of businesses are allowed. All type of businesses are allowed except three. First is if you're into a business of flying, hiring, leasing of good carriages. Like if you're into a business of transportation, that is not covered because uske liye there is a separate presumptive taxation which is 44 AE. Secondly, if you're a person who's carrying on agency businesses, you've taken agencies of various products, that is a business also, but in that case, you cannot claim presumptive taxation. Third is when you're a person who is into a nature of income having commission or brokerage, property dealers who work on brokerage basis, for them 44 AD is not applicable. Also, anyone cannot claim this presumptive taxation because the idea was to give relief from compliances to small taxpayers, correct? That's why this is only applicable to small taxpayers. So if your turnover or gross receipt from the business does not exceed 2 crores, then only you can claim presumptive taxation. Okay. So what are the criteria? Resident for individual HUF firm, not LLP. Sale or the turnover during the year is less than 2 crores, is 2 crores or less, and then this is not applicable on these three businesses. Clear? Yes. What is the presumptive profit? The presumptive rate is 8%. The presumptive rate is 8%. But again, to promote digitalization, to promote bank transactions, this 8%, instead of 8%, you can claim 6%. You can claim 6% if on those turnover which have been received in account pay check mode, account pay bank draft mode, in through electronic clearing systems, through NEFTs, through RTGS, through prescribed electronic modes. On that turnover, you can claim 6% of profit instead of 8%. So, ma'am, please explain. Yes. And provided you have received that turnover in the modes which we discussed. Ma'am, till when time received? Received on or before the due date of return filing. So, suppose my sales during the year is 50 lakhs all cash. 50 lakhs all cash. Then what would be my profit? What would be my profit? 50 lakhs ka 8% would be my profit, which would be 4 lakhs. So 4 lakhs direct, I will show it in PGBP part. 4 lakhs direct, I will show it in PGBP part. But if my sales during the year is 50 lakhs, out of which 20 lakhs is on cash, 30 lakhs is on credit, 20 lakhs is on cash, 30 lakhs is on credit. 20 in cash, 30 in credit. And out of this 30, all the amount have been received in account pay check mode before the due date of return filing. Then what would be my presumptive income? On 28% and on 36%. On 28% and on 36%, which would come to 3.4 lakhs. Clear? Now let's take another typical situation. Where 50 lakhs is my sale during the year, 20 lakhs is in cash, 30 lakhs is in credit, but out of this only 25 lakhs was received in the mode prescribed, 5 lakhs is still outstanding. 5 lakhs is still outstanding on or before due date of return filing. Now what will you do? On this 20 plus 5, you will apply 8%. And on this 25, you will apply 6%. So here my taxable in PGBP income would be 3.5. So whenever you are doing presumptive taxation, it is assumed that all the deductions which we discussed from section 30 to 37 are already given to you. So you do not need to claim any deduction separately. Any deduction separately you cannot claim because it is assumed that you have already taken all the consideration, all the deductions. Okay? But one thing you have to remember is even if you are doing this, you have to maintain a depreciation chart. You have to maintain a depreciation chart, means you have to calculate WDV each year for your own purpose. Why? Because in the year, think, in the year when your turnover crosses 2 crore and you're not eligible to claim 44AD and you're not eligible to claim 44AD, you have to claim other deductions, right? So us time pe depreciation claim karne ke liye you should have WDV in hand ready. So if suppose for 5-6 years I've been claiming 44AD, now I have become popular, I crossed my 2 crore ka limit. Then when I'm crossing that 2 crore ka limit, when I am crossing that 2 crore ka limit after 6 years into business, I need WDV, right? I need WDV, right? So it's better, always it is said that you have to prepare the WDV ka chart. Although you're not claiming depreciation, but WDV ka chart has to be prepared. Why? Because in the year when you move towards the normal taxation ka scheme, you should have the written down value ready with you as if you were claiming the depreciation. Clear? Any doubt up till now? Shreya, is it clear? Credit sale, Adil, would be considered when it is encashed. When it is encashed, credit sale if encashed in cash, then it will go in that 8% wala part. Credit sale if encashed in other modes, it will go at 6% wala part. Credit sale not encashed up till return date of filing, then it will go to the 8% wala part again. So only student, this is only the PGBP income which has to be considered. Deduction under chapter 6A would definitely be allowed, but this is just one head of income which is coming at a flat rate. Is income pay, you will claim deductions. Is income pay, you will claim your deduction. Is income pay, you will pay taxes along with other income added, other heads of income added. Siddharth, credit value not to be treated as cash. You have to see how much is materialized. Okay? Brinda, in brief, 6% condition is that, see, 6% क्यों दिया? First you have to understand it, then you will automatically understand 6% condition. 6% was given to understand, to promote what? To promote transparent transactions, bank transactions, electronic transactions, digital transactions, right? So to all the sale which has been recovered in these modes, account pay check, account pay bank graphic, electronic clearing system, or through prescribed electronic modes, on or before the due date of return filing, you will give 6%. So it was to encourage them. No, Shreya Dubey, no. Why? Because you have to see credit sale कैसे materialize हुआ later. Credit sale का money आया नहीं आया. Number one thing you have to see before return filing date. If received, then how was it received? Whether in cash or in account pay mode. And if credit sale not received at all, then 8%. Turnover, yes, would be given in the question. You do not have to worry. Good, Rupesh. अभी आदिल जब 44 AB नहीं समझाया, there is a specific purpose why I have covered 44 AD before 44 AB. So let's just stick to it first. Due date of return filing is 31st July, but if your accounts gets audited, it is 30th September, or if you're a company or a firm SSC, then 30th September, if you're a company SSC, or if your accounts are getting audited under any act, 31st October is the due date. If international transactions TP is applicable to you, it is 30th November. Is the basic clear? Correct. Pooja Gajjar, correct. एजेंसी बिजनेस क्या होता है स्टूडेंट्स? आप ना काफी कंपनीज का एजेंसीज लेके चलते हैं, वेयर रोहिणी जस्ट लाइक एमवे का if someone has taken an agency, that is agency business, or even if you have an LIC agent, that is an agency business. Correct, absolutely correct, Sophia. Good. When we're talking about presumptive taxation, no deduction is would be allowed. That is clear, correct? No need to not even salary to partners is allowed. Not even salary to partners is allowed. There is no need to maintain books of accounts. There is no need to get your accounts audited. There is no need to pay books of accounts. There is no need to get the accounts audited. Advance tax is generally for all assessees. Advance tax has to be paid 4 times in a year. What is advance tax? That is a separate thing. But for presumptive taxation assessees, advance tax is only to be paid for only one time during the year, that too on 15th of March for every year. Last point is something which is very typical and very important to understand. Let's understand that. Okay. So the government was very annoyed when they saw that some people by their own are claiming 44AD and by their own are going out of 44AD. But before that, let me just explain you one thing on 44AD. On the screen, everyone. So let's, for assumption, take our flat rate at 6%. Let's assume all your sales are done through bank account. Okay. Now a question comes, ma'am, I need to file, I need to claim loan. Okay. And for loan, I need to show higher income. So can I show higher income? That means if my turnover was 100 lakhs, PGBP income would have been 6 lakhs, correct? Correct. As per this presumptive income, 100 lakhs में PGBP income would have been 6 lakhs. So you will ask, ma'am, I need to claim some loan. So can I show higher profits? Can I show higher profit? Because since I am running on decent turnover, I was maintaining books of account and I see my profit is coming as 15 lakhs. Can I claim it? Yes, very much you can. Yes, very much you can claim higher profits. Our income tax department would be more than happy. Okay? So even if you are opting for 44AD, then also you have an option to claim higher, to show higher profit. That this is what the minimum profit is. This is what the minimum profit is, because government has assumed that in any business, at least net income of 6% or 8% a person would be earning. At least net income of 6% of the total turnover he must be or she must be earning. Okay, so this 6% has been considered. Yes, you can claim higher profits, number one. Ma'am, what about lower profits? Can we claim a lower profit because COVID tha, there was a situation where we did not earn good? Can we show 4% as our lower profit? The answer is no. Why it is no? Because if you go to show such lower profits, then you have to get your account audited. If your net income is more than basic exemption limit. What did I say? Generally, when you are claiming 44AD, there is no need to get your account audited. What are the limits? We'll discuss. There is no need to maintain books of accounts because this section was introduced to make you compliance easy, right? To make you easy on compliance. So no needs to maintain book of accounts, no need to get account audited. This is one general thing when you're doing 44AD. But the moment you want to show lower profits, you need to get your account audited if your net income is crossing your basic exemption limit. The net total income which you are showing is crossing the basic exemption limit, then you have to get your account audited and then only you can show lower profit, because government says कि ऐसा क्या हो गया, what thing has happened that you are not even earning a basic desired profit. Whether in such situation are you telling the authentic information? So then that's why they have put a requirement of getting audit. That's why they put in a requirement of getting audit, that what the circumstances, whether there were genuine circumstances to claim lower profits. That's why, because any business would anyhow could claim 6%. So what people do is if they're not even earning in real life, if they're not even earning 6%, they tend to show at 6%. Why? Because who will get accounts audited? Who will maintain it? Who will pay the audit fees? If more, in turn, you will spend more losses would be there. So students generally, people tend to show 6% or 8%. Okay. But if you really want to, then go ahead with getting audit and if your net income is more than basic exemption limit. If your net income is less than basic exemption limit, then you can show lower profits without getting books of accounts audited and maintained, or maintained and audited. Clear? अब इसी पे there is one very important criteria. Let's discuss that. Students, if you are claiming 44AD, if you are claiming 44AD, it is important to claim 44AD for the next successive 5 years. So if we have started claiming 44AD in previous year, 18-19, this is the first year when I claim 4480. That means I've shown my profit at 6% or higher amount or higher percentage. Then in 18-19, I've claimed it, but also in previous year 19-20, 20-21, 21-22, 22-23, and 23-24 also I should claim 44AD. I should show my income as per 44AD. Ma'am, if not, so suppose in this year I showed my profits at 11%, this year I showed my profit at 10%, this year I showed my profit at 8%. But since this was a very bad year, I choose to show my profit at 4%. So for the 5 successive years, I'm not claiming 4480 because I've chosen to show my profit less than the limit prescribed. So I'm not claiming the presumptive taxation of 4480, right? So the government says if listen carefully, if you're claiming 4480, then for the 5 successive consecutive years also you have to claim 4480. If you do not claim so, then in this year, you have to get your, in this year and for the next 5 successive years. For the next 5 successive years, which would be from previous year 2021 to 1 this plus 5 more. Plus 5 more, which is 22-23, 23-24, 24-25, 25-26, and 26-27. I will not be allowed to claim 4480. I will not be allowed to claim 4480. So this year plus next 5 years also I would not be allowed to claim 4480. 22-23, 23-24, 24-25, 25-26, and 26-7. Even if I am showing, I'm ready to show the profits later also, no. For the 5 next years also, I cannot claim 4480. What did I say? When you are claiming 4480, for the 5 consecutive years, you have to claim 4480. If not, so if this is the what is not situation, this is the not year situation, then in this case, obviously I'm not claiming 4480. But for the 5 successive years also, I cannot claim 4480. For the 5 successive years also, which are these, I cannot claim 4480. Okay, so that year plus the next 5 years also. If had this been the case where you would have shown 4% in 24-25, then obviously next 5 years wala condition would not be mattered. Only this year wala condition would have applied. And whenever we are not claiming 4480, so for all these years plus these years, you have to get your accounts maintained, get them audited if your income is crossing the basic exemption limit. If your net taxable income is crossing the basic exemption limit. Clear? I'll repeat again. First, I'll say this. If a person opts for presumptive taxation scheme, then he's also required to follow the same scheme for the next 5 years. If he fails to do so, then presumptive taxation scheme will not be available for him for the next 5 years, including the year in which he has not claimed. So this year, plus the next 5 years he would not be eligible to claim. But students, in all these years, he has to maintain books of accounts, get them audited if his net income is more than basic exemption limit. If his net income is less than basic exemption limit, no requirement. Clear? This point is tricky and is important. हो गया? चलो. Shall we move to our next head? Yes, Vrinda, in those situations also. But this is typically to cover those cases where people were going off and on into presumptive taxation coming out. So to those people, this situation happened. If your income does not exceed basic exemption limit, you can show low profits without getting them audited. Because government को क्या ही लेना देना है 2.5 lakhs, correct? Ramakrishna, listen here. With an example of net income more than basic exemption limit. Preceding 21-22 में तो previous year 21-22 में I claimed lower profits of 4%. ठीक है? Now listen carefully. In this year, I have to get my accounts audited, yes or no? In this year, do I have to get my account audited, yes or no? My net income is 3 lakhs, which is obviously more than basic exemption limit, and I've claimed lower profits. When I say accounts getting audited, that means the books are getting maintained. Okay. So yes or no? Yes. Obviously, now I'm ineligible to claim the I'm eligible to claim 4480 for the next years, right? So for the next 5 years, I cannot claim it. It is a ban on it. It is a ban on it. I cannot claim it. Now the question comes whether I need to get audited or not depends upon the net total income. Here 22-23 may yes. 23-24 may no. 24-25 may yes. 26-27 may yes. 25-26 may yes. 26-27 may no. Is it clear now? So that what are the other deductions from 30 to 38 when we talk about business? All the deductions are covered in these sections only, right? PGBP के अलावा there is no deduction. There is salary, which is 40 BK limit के according, that is not allowed. Ramakrishna, I hope it is clear. Absolutely right, Sudha. Absolutely right. Absolutely right, Rohit Sudha. Clear? एक बारी 44 AD gets clear. 44 AD is a cakewalk for you. So let's resume. This is what 44 AD was all about. 44 ADA is on professional income because business for the presumptive taxation given, right? But what about professions? What about professionals? What about professionals? First of all, this section is only applicable on professionals who are there on the list, which you can see: legal, medical, engineering, architectural, accounting, C, technical consultancy, interior decorator, and other professions as notified by CBDT. Number one. Number two, this is only for resident individuals or a professional which is into resident partnership, not resident partnership. Number three, this is only applicable when your gross receipts turnover to nahi hota professionals mein you have gross receipts. So when your gross receipts is up to 50 lakhs, 50 lakhs or more, if it crosses, then you cannot claim presumptive taxation. Presumptive profit here is at a flat rate of 50%. There is no 8%, 6%, no different limits. Flat rate of 50% is applied. That means if your turnover, gross receipts is 45 lakhs, then 22.5 lakhs would be presumptive profit. Now, why such a high rate? Because profession it is considered, it is more about skills. The expenditures incurred are very less in comparison to business income. That's why 50% flat rate. You can show higher profits. Obviously, if you show lower profits, books of accounts is required to be maintained and audit has to be done. Since again it's a presumptive taxation wala case, all the expenses are assumed to be allowed. No other expenses are allowed, not even salary to partners. So here there is no panga of that 5 years. Here, if you do not claim only in that year, you have to show the audit. There is no panga of claiming it for 5 years and then not claiming for 5 years. No, simple. In the year which you do not claim, gets your books of account audited, and only if the problem is only if your net taxable income is more than basic exemption limit. But 44 AD cannot be claimed by all the professions, only by notified professions which are there on your screen. Simple. So if 44 AD is itna, 44 ADA is just itna to understand. What should be less than 2.5 lakhs? Yeah. Turnover include kind means turnover in kind included. Next presumptive taxation which we are covering and is very important because a question comes to you is 44AE. 44AE is for the associates who are into transportation, individuals, HUF, firm, company, anyone can do it. Unlike 44AD and ADA, in firms, companies are also included. Every person can take it. Every person can claim 44AE if they're into a business of flying, hiring, leasing goods and carriages. But the condition is you cannot own more than 10 trucks during the year. 10 trucks during any time, at any time during the year, you cannot own more than 10 trucks. If you own it, then you are not eligible for presumptive taxation. Then maintain your books of accounts, Baba. Get your accounts audited. Do add less deductions, admissible, inadmissible, and all these things. But here there is no turnover limit. The criteria is 10 trucks or less during any time or any time during the year, then you can claim it. Here, truck ownership is important. If you own it and do not put to use, then you cannot say that I have not put to use, so do not consider that in my 10 goods ka limit. No. If you have 10 goods vehicle, whether small, big, heavy, light, does not matter. But if you have 10 or more, or 10 or less, you can claim presumptive taxation. If you do not have 10 or less, that is, if it is more than 10 years, you cannot claim presumptive taxation. The point is that any time during the year, why I'm focusing on that? Because, say, for example, you owned 9 trucks in May. Okay. Then in June, you added 2 more trucks. But in July, you sold out 4 trucks. Sold out 4 trucks. Now, what is the number? Sorry. What is the number which you have at the end of the year is 7. Right. So you say, ma'am, I have 7 trucks. Can I claim it? No. The point is, at this time, my number of trucks crossed 10, number of trucks crossed 10. So I cannot claim it. I cannot claim it. Why? Because at any time during the year, the number should not cross 10. Now take a opposite situation. First, you had 9 trucks. You sold 4 and then you added 2. You sold 4 and then you added 2. Abhi at the end of the year, there are 7. Can I claim this? Yes, because at any time during the year, the number is not crossing 10. Clear? Yes. Also, in this case, since it's a presumptive taxation, what is the presumptive taxation here? How do you calculate it? I'll come to it. But since it's a presumptive taxation, you cannot claim any deduction from 30 to 37. But here, the catching criteria, student, is that you can claim salary to partners. Unlike 44AD and 44ADA, you could not claim salary to partners, but here you can claim salary to partners provided that is under the restriction of 40B. Okay? Clear? No need to maintain books of accounts, no need to get your accounts audited. Payment of advance tax here also happens in one single installment, which is 15th March. 100% advance tax will be paid by 15th of March. These are the provisional criteria. But the point is, how do we calculate the presumptive profit? How do we calculate the presumptive profit? You have to categorize your trucks into 2 parts: heavy good vehicles, other than heavy good vehicles. Heavy good vehicles, other than heavy goods vehicles. Uske baad, what you have to do is, once you have divided your trucks into 2 parts, heavy good vehicles, first of all, heavy good vehicle kya hota hai? Heavy good vehicle means any truck which has a gross weight. Any truck where we talk about gross vehicle weight, that is, if is more than 12 tons. More than 12 tons, and 1 ton is equal to 1000 kilograms. That means more than 12,000 kilogram ka koi truck hai, that is in heavy good vehicle. Gross vehicle weight, and if gross vehicle weight is not given, then unladen weight. Now, what is unladen weight? Unladen weight is only truck ka weight. Only truck ka weight. Gross vehicle weight is truck ka weight along with that saman ka weight which is there in it. Okay, so if it is more than 12 tons, it is my heavy good vehicle. If it is less than 12 tons, it's a other vehicle category. Okay, if it's other vehicle category, less than 12 tons. 12 tons means 12,000 kilograms. So other vehicle के लिए simple, what you have to do is, other vehicle के लिए my presumptive income is per flat, not percentage, but a flat amount. They say that per month you earn 7,500 from a vehicle. We assume that you earn per month 7,500 from a vehicle. So 7,500 per month or part of the month into per truck. The per truck means if I have 2 other than heavy weight vehicle trucks, so, and I owned it full during the year, full during the year. So 7,500 for 12 months. This is for one truck. Into 2 would be my income for 2 trucks. So presumptive income is this per month or part of the month. Per month or part of the month means per month or part of the month of ownership. So if one truck was owned from June and another truck was owned from the beginning of the year, then my presumptive taxation would be 7,500 per month for first truck, which is owned for full 12 months, and 7,500 since I owned it from June and April, May only I did not own it. So per month, which would be 10 months into 1. June se leke March tak. So if you own it even on a part of the month, then also it would be considered as full month. Even if you've owned it only single day in a month, then also it would be said as that you have owned it for full month. So if you have owned a truck on 28th of March, then also 1 month ka presumptive taxation you have to take. Again, this was from beginning of the year. This was from June ownership. So June say 10 months, 7,500 for each month for one truck. From the beginning of year, 12 months, 7,500 for each month, one truck. Clear? This is for other vehicle. Ma'am, what about heavy good vehicle? Heavy good vehicle ke liye, you calculate the presumptive taxation per ton. So 1,000 per ton per month or part of the month into number of vehicles. So for each, how do you calculate? 1,000 per ton. So if the good vehicle is of 18 tons, so 1,000 for one, I have one heavy good vehicle. So 1,000 into 18. So 1,000 per ton ho gaya. Into per month, if I owned it, suppose for the whole year, into 12, and I had only one. So this is my one truck ka presumptive income. 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 So if I had two other than heavy good vehicle and one heavy good vehicle, this plus this plus this would be my total presumptive income. We'll do one question on it first. Question mein na, it would not be mentioned that calculate presumptive taxation. If it's a heavy good vehicle question, you have to understand, oh, this can be a question of presumptive taxation. Maybe. Can you claim higher profits? Yes, here also you can claim higher profits. First, now let's see how do we calculate. This is a question for you. I will tell you how to calculate it. You yourself will calculate. Okay. Mr. X commenced the business of operating goods and vehicle on 1st April 2021. He purchased the following vehicle during the year. Compute his total income under section 44AE. First, I have to see whether my numbers of trucks are crossing 10 or not. 2 plus 1, 3, 3 plus 3, 6, 6 plus 3, 9 and 10. So can I claim presumptive taxation? Yes. Would your answer change if the good vehicles purchased in April 21 were put to use in July 21? The answer is no. The criteria here is ownership. Put to use does not matter. So in both the cases, the answer would be same first of all. So now let's calculate what would be our answer. Okay, I will give you time because I need you to self-calculate it. Don't see the solution. First of all, the gross, इसमें से heavy vehicle वाला weight कौन सा है? 5th and 6th. So for first two, 7,000 into two trucks. Sorry, 7,000 is 7,500 into 2 for how many months? For full 12 months. For full 12 months. Is the presumptive taxation? Is truck ka presumptive taxation would be calculated for how many months? The rate would be applied for how many months? 7,500 into 1. That is for one truck into 1 because only it was put, only it was owned for 1 month. इसका 7500 into 3 into how many months? 9. 11,000 into one truck into how many months? Not 11,000, 7,500 into 1 into how many trucks? How many months? January, February, March, 3. This 1,000 into 15 into 2 number of trucks into number of months, which would be 8. फिर 1,000 into 15 into 1 into 2 months. All of that in total would be my presumptive taxation. Quickly, you have 3 minutes to solve this question. While I take your question. Full income निकालो. Yes, this is the presumptive income which is taxable in PGBP Nidhi. Kalivyanan, why there is a separate for transportation? Because transportation sector depends wholly on the loading weight you have rather than turnovers. Usme turnovers itna high generally do not go. You're a good transporter when you have certain trucks. That's why based on number of trucks they have put it in the thing. Naveen Chandra Gajjar, I hope your question is clear. Can a CA claim 44ADA? Think if it is falling into just accountancy profession, yeah. Question में if gross vehicle weight is given, you will pick gross vehicle weight. If unladen weight is given, you will pick unladen weight. Do not see the answer. Answer has been calculated in separate form, but answer would definitely match. $15,000 per ton है, ठीक है? So, sorry, 1,000 per ton. 1,000 into 15 into 2 is the number of trucks you have into how many months? Into August, September, October, November, December, January, February, March. Into 8 months. Into 8 months. Even if it is 29th August, does not matter. The presumptive taxation for heavy vehicle is 1,000 per ton. 1,000 per ton. 50,000 kilograms ka mean, it is 15 ton. It is 15 ton. 1,000 per ton for every month or part of the month for which it is zoned into number of trucks. Guys, I'm waiting for your answer. The time is up. Correct answer is 682500 and I hope you all have received it. These people calculate months basis pay. You can calculate it as we have discussed. That is not an issue. Ankit, very good. Siddharth, very good. Rohan, good. Others, I'm waiting. Rupesh, your answer. Gajan Naveen Chandra. Good, Somesh. Very good. Okay, 1 minute, not 1 minute, 20 seconds more. Siddhant, 41.5 is just a general thing. You will give it a read, you will understand it. 11,000 is not a heavy vehicle. 12,000 above is a heavy vehicle. Now we move ahead to another very important session for today. Just two sections left, 44AA and 44AB. Maintenance of books of accounts and audit. Now, maintenance of books of accounts is important for PGBP because otherwise, how will you track how much is your expenditure, how much is your income, how much expenditure is done in relation to what regard, how it is paid, and all those things, right? So, maintenance of books is important, but income tax says maintenance of book for everyone is not important. Certain businesses and professions have to maintain books of accounts. What are the books of accounts? Any books of accounts which the AO, if your case goes in scrutiny, can take up easily or can go through it, through which he can compute your income. So any books of accounts, it can be a slip, it can be a journal, it can be a ledger, which will help AO to compute your book of income, would be the books of account in general. Now 44AA means there is a concept of notified profession. Notified profession. So if you're a notified professional, who all are my notified professional? If you are a notified professional, who all are that I'll discuss. So if you are a notified profession, the notified profession becomes legal, medical, engineering, architectural, legal, medical, engineering, architectural, or accountancy, technical consultancy, or interior decorator, or any other notified profession by the CBDT. CBDT has notified your CS, film artist, professional, authorized representative, no, 1, film artist, 2, company secretary, 3, and information technology, 4. So 1 is legal. Ma'am, do we have to remember it? Yes. Legal, medical, engineering. So how will you remember it? How I used to remember it? I used to divide it into my 11th stream. That if someone is into medical, he will, if someone is into science, in either medical or they will go to engineer or they would be in architecture. Okay. Then if they have taken a commerce and they would be into legal, they would be into accountancy, or they would be a company secretary. Then what was left? Arts. But this is very stereotyping. I'm just trying to help it to revise it, or if someone is into technology, then information technology. Otherwise, technical consultancy, interior decoration, film artist, and authorized representative. This is how I used to remember. It is not stereotyping that if you're into so and so stream, this is how you will remember go, but just a thing to remember. Okay. So total how many? 1, 2, 3, 4, 5, 6, 7 plus 4, total 11. professions which are notified, which you have to remember. So the provisions for notified profession is different, and the provision for other business and other profession is different. So first we'll understand for notified professionals, and then we'll understand for other business and professions. Okay. And these are the notified professions on which 44AD apply. No other professions with 44AD apply. First, we'll talk about part A, which is our notified professionals. For any notified professional, for any notified professions, books of accounts, which we just discussed, books of accounts ka maintenance is mandatory. For the notified professions, books of accounts ka maintenance is mandatory. If they're under 44ADA, it is not mandatory. But for other notified professions, books of accounts is mandatory. But what books of accounts? So I told you any books of accounts which help AO, to compute the income, correct? Which help AO to compute the income. What books of accounts? Which help AO to compute the income. But Rule 6F is a rule which is an income tax rule, which is only for notified profession, which lists certain books of accounts which have to be maintained. That means, as per Rule 6F, you have to maintain certain prescribed books of accounts, and at the place at which it must be kept, that is all given in Rule 6F. That is all given in Rule 6F. So as per Rule 6F, you have to maintain cash book, journal, ledger, carbon copies of bills having value exceeding 625, original bills and receipt for a value exceeding 50. These things is what you have to maintain as per Rule 6F. What did I say? Notified professional always have to maintain books of accounts. Okay. In general, books of accounts are what books of accounts which help assessing officer to maintain to compute the income. But as per Rule 6F, these are the 5 types of books of things or accounts or documents which you have to maintain. So on whom Rule 6F is applicable? Rule 6F is applicable on notified profession, but with certain condition. What is the condition? The condition is if their gross receipt in all the 3 preceding years, is more than 1,50,000. In all the 3, that means each year, it is more than 1,50,000. Then you will maintain books of account as per Rule 6F. If not, then also you have to maintain books of accounts, but general books of accounts which will help AO to compute the income. If this is met, then Rule 6F according books of account has to be maintained. If not, then also books of account has to be maintained, but as per your convenience, which will help AO to compute the total income. So in all the 3 preceding years, if the income is more, if your gross receipt is more than 1,50,000. Acha, now you will ask, ma'am, if the business has just started, whether we'll go for Rule 6F or whether we'll go by general maintenance of books. So I say, if you think that your income would likely cross 1,50,000 during the year, then you will go as per Rule 6F. Otherwise, you'll go by general maintenance. Books of accounts. So let's see this question. We know there's a person carrying on profession as a film artist. The moment he's a film artist, that means he's a notified profession. That means he has to maintain books of accounts. But which type of books account has to be maintained, that we have to see. His gross receipts from the profession is as under 1819, 1920, 2021. 1,15,000, 1,80,000, 2,10,000. What is the obligation regarding maintenance of books of accounts for assessment year 22-23, which is financial year 21-22? So we have to see whether in all the 3 years immediately preceding the relevant previous year, which is this 1, 2, 3, whether in all the 3 years the gross receipt is more than 1,50,000, which is not the case. Because एक साल में it was less than 1,50,000. Hence, there is then there is no requirement to maintain books of account as per rule 6F, but he, however, has to maintain books of accounts, which will enable the assessing officer to compute his total income. Clear? So to summarize, we are only discussing about notified profession. The list is clear. Notified profession always have to maintain books of accounts, but they have to maintain books of account as per rule 6F if their gross receipts in all the 3 immediately preceding previous year is crossing 1,50,000. If not, then they have to maintain it, but not as per 6F, which is not as per the prescribed books of accounts. Clear? Next part is for other professions who are not notified or specified, and businesses, right? Other professionals and businesses. इसमें the criteria to books, I mean, whether you have to maintain books of account or not is mandated. Books of accounts or not, whether you have to maintain books of accounts or not, that is what we have to see. Part A may notified profession by default have to maintain books of accounts, but if there is that turnover wala thing, the gross receipt wala thing, if that is met, then as per rule 6F. If that is not maintained, then as per your convenience to help AO to compute books of accounts. Here we will see when you have to maintain books of accounts, when you have to maintain books of accounts. So any other business or any other individual or HUF, any other business or other profession not specified and notified, for them the books of accounts, the criteria is different. The criteria is that in the last 3 years immediately preceding the previous year, in any of the last year, उसमें था all, इसमें if in any of the last years, either your PGBP income is more than 2,50,000 or your turnover in any of the last 3 years or your gross receipts or turnover is more than 25 lakhs. What did I say? If your PGBP income is more than 2,50,000 or your gross receipts or turnover is more than 25 lakhs, then you have to maintain books of accounts. If not, you're not required to maintain books of accounts. Now, what kind of books of accounts? That is the accounts which will help AO to compute the accounts and documents which will help AO to compute the income. If you are other than individual or HUF, if you're other than individual or HUF, this 2,50,000 ka limit and 25 lakh ka limit would be 1,20,000 and 10 lakh respectively. That means if you're a company, you will maintain books of accounts if in any of the last 3 years, not all, but in any. So even if in 1 year the limit crosses, then you have to maintain books of accounts. So if any of the last 3 years, the PGBP income is more than 1,20,000, I'm talking about PGBP income, not total income, or the gross receipts or turnover is more than 10 lakhs. You have to maintain books of accounts. Clear? And if you're a new business, if you expect that such limit will cross in the first year itself, then you have to maintain books of account. Again, if you are in a SECI, which we just discussed, who is claiming 44AD, 44AE, 44ADA, please rectify this. Then you do not have to maintain books of accounts. Sudha Rohit, I hope your answer is, you got your answer. with the example which we did? Next is 44AB. 44AB is you have to get your account audited. Get your account audited, which we commonly call as tax audit. Tax audit in case of business or profession. When is tax audit ka limit applicable? What is tax audit ka limit? Tax audit ka limit is if you are into a business, tax audit ka limit would be the moment your turnover or gross receipts crosses 1 crore. For the year which we are talking about, for the financial year, for the previous year, not any preceding year. If you are a professional, the moment your gross receipts crosses 50 lakhs. Because up to 50 lakhs, so you get presumptive taxation. Okay. But here this 1 crore would be considered as, here this 1 crore would be considered as 10 crores. That means if your turnover is up to 10 crores, then tax audit would not be applicable provided your total cash receipts is within 5% of total receipts. That means total receipts, not only business receipts, total receipts during the year. The 5% is my only cash receipt, or up to 5% is my cash receipt, and so is with cash payment. If my total receipts total payments of 5% is in cash payment, up to 5%, then my turnover, then my this audit ka turnover would be 10 crore. So you see such a big incentive to promote or to not promote or to discourage the cash payments and to promote the digital transactions and to promote banking transactions. They've said tax audit would not be applicable if you limit up to 10 crore ka turnover, provided you are just making a fraction of your receipts and purchase in cash, and that fraction is 5%. 5% of total gross receipts and total gross payment. You have to compare it. Otherwise, if it is processed, then your turnover ka limit applicable for tax audit would be 1 crore. Would be 1 crore. Clear? Similarly, E44BB and triple B, I'll remove it when I give it on the notes part. Similarly, if you are not claiming 44AE, if you are not claiming 44AE, that means you are showing lower profits, then you have to get your accounts audited. If you're not claiming 44ADA and showing low profits, and your income exceeds the basic exemption limit, then you have to get your account audited and obviously books accounts maintained. And also for 44AD, for that 1 year and the 5 successive years, for that 1 year and the 5 successive years, if your books of account, if your income crosses basic exemption limit, and you that 1 year of not claiming it, and for the 5 successive years, if your income crosses the maximum exemption limit, you need to get your accounts audited. So that's all about audit maintenances. That's all about PGBP from my side to you. 43A and composite income is a small readable sections which you can give a look to. If not clear, we'll take it up in the next class or our last class. Take a moment. I'll just take a few questions, and then before starting capital gain, we'll take 10 minutes to break. So, if you ask, ma'am, if you are claiming 44AD, you have a limit of 2 crore, 44AB is not applicable. You are, because suppose you have a limit of 100 and your turnover is 150 lakhs. Your turnover is 150 lakhs, right? Which is 1.5 crore. You are claiming 44AD, 44AB not applicable. But the moment you do not claim 44AD and show lower profit, 44AB would be applicable. Audit has to be done before the due date. Due date here in this case of audit would be 30th September. 30th September, and if you are into TP, then 31st October. Transfer pricing, international transactions applicable 31st October. Partner remuneration not allowed in 44AD and ADA, but it is allowed in 44AE. Listen, 44AB simple sa hai, books of account, 44AB simple, you have to get your accounts audited. When you have to get your accounts audited, the moment your gross receipts crosses 1 crore. But if your gross receipt is more than 1 crore and it is up to 2 crore, you are claiming 44AD, no need to get your books of accounts audited. Okay? The moment you are into profession and your gross receipts crosses 50 lakhs, gross receipt crosses 50 lakhs, you have to get your accounts audited, because less than 50 lakhs mein you are claiming presumptive taxation in any way. Then this 1 crore ka limit would be considered as 10 crore ka limit if your cash receipts or payments are up to 5% of total gross receipts or payments. That means if your turnover is 10 crore or 8 crores and your cash receipts and cash payments are within this 5% bracket, no need to get your books of accounts audited. Presumptive taxation milega? No, because the turnover is 8 crores, but audit bhi nahi hoga. Audit bhi nahi hoga. Audit would also not be there. If you're claiming 44AE, audit not required. If you're claiming 44ADA, audit not required. But if you show lower profits in 44AE, audit required. If you show lower profits in 44ADA, audit required, provided the net income, provided your net taxable income is more than basic exemption limit. Basic exemption limit criteria is not here in 44A. If you are in 44AD and claiming lower profit, audit required, provided your net income exceeds the basic exemption limit. And also for the next 5 years, you have to get audit provided the same net income is exceeding basic exemption limit. You will remember, Riya, do not worry, you will remember all sections, because when you will do a chapter twice, thrice, 4 times, you will easily remember all the section. 44AB, ADA, AD is something which you will remember even when someone asks from your dream that what were you thinking about, this you will remember. Do not worry, you will move back to it. Abhi sirf suna hai, you have heard the name for the first time. Once you will go through it on and on, you will automatically remember it. This is a compliance section, student. Compliance section. There is no deduction section here. Cash, Rohini, if cash receipts and payments are less than 5%, see 44AD is independent, 44AB is independent. 44AD is of how to compute profit. 44AB is a compliance section. Okay? But the common thread is the turnover, which is giving there and of not claiming the profit. If your turnover is up to 2 crores, first go for 44AB. Okay? If your turnover is 3 crores, then 44AB is applicable. But if your cash receipts are less than the 5% limits and the cash payments are less than 5% limit, then 10 crore ka limit. 10 crore ka limit. So in 3 crore ka turnover, you're not claiming 4480 because you are out from there. Why? Because 2 crore ka limit is there. But you will show claim deductions as per 30 to 37. You will claim deductions as per section 30 to 37. But audit is not required. Audit is not required. Simple. Up clear hua? We will do it just after the break, Bhavna. Okay. So with this, we'll take a break. Go eat something, relax, take your mind off from PGBP. Take your mind off from PGBP. We'll meet in next 10 minutes and we'll start with capital gain. We'll start with capital gain. Capital gain means students, there is no PPT because capital gain ka na, there is a long list. So instead of just copy pasting it from the module, I will give you important points to remember or important points to check when you're doing a capital gain question. Okay. So let's come back in 10 minutes, hydrated, and we will start with capital gains. Okay. So welcome back after the break. We will start now with our capital gains chapter. One second. Just 1 minute. Okay, so capital gain students, again, just like my favorite word for each head comes with charging section. Salary ka charging section says about employer-employee relationship and to be taxed on due or receipt basis, whichever is earlier. House property ka charging section says that there should be the ownership and there should be land building apparent there too. To charge the annual value. Annual value was the term which we saw. PGBP may we saw there's a list of incomes which are taxed in PGBP. Any income from business or profession or vocation. Along with that, there was certain list. What about capital gain? So capital gain has a very simple, I'll say a very, very simple criteria. To tax the asset. So section 45 is the charging section of your capital gain, which says capital gain. Section 45 means capital gain means profits or gains arising from the transfer of a capital asset effected in the previous year will be chargeable to income tax under the capital gains. Capital gain will be deemed to be the income of the previous year in which the transfer took place. In this charging section, two terms are important. One is capital asset and one is transfer. First, students, let's understand section 45 kya keh raha. What is section 45 saying? Section 45 saying that profit and loss of income from transfer. Transfer. The word which is being used is transfer of capital asset. किसके ट्रांसफर से? कोई भी एसेट नहीं, कैपिटल एसेट का ट्रांसफर. So capital asset. Would be charged to the income, would be taxable in the hands of the assessee in the year in which transfer took place. In the year in which transfer took place. Okay, so हमारे लिए to what before understanding anything ahead, we need to understand two very important terms: what is transfer and what is capital asset. Transfer and capital asset. So first, let's understand what is transfer. Transfer is given under section 2, clause 47. Transfer ka definition is given under definition wala section. Definition wala section is section 2. Uska clause 47 mein transfer is explained. What is transfer? Sorry, I pick it up from here. This one, sorry. Yeah. So what is transfer? Transfer hona is very important. Transfer is very important, but what is transfer? Transfer is when there is an inclusive definition of 7 points. First is when there is a sale, exchange, or relinquishment of asset. That means if I sell an asset, that is a transfer. If I sell an asset, that is a transfer. If I exchange an asset for another asset, that is a transfer. You had what do you say? You had jewelry, I had shares, I gave you my shares, I took jewelry. For that, that is a transfer. Relinquishment of the asset. What is relinquishment of the asset? This is a new term, right? Relinquishment of the asset means, student, when I talk about the asset that is gone, demolished, asset destroyed in fire is relinquishment of the asset. So you have not transferred it by actually selling it, but now the asset has been destroyed, right? So that is relinquishment of the asset. Extinguishments of any rights therein. Extinguishments of any rights therein, that means if on a particular asset, on a particular capital asset, I am giving up my right, I am giving up the right, and for giving up that right, that is a transfer. Students, if you know right shares क्या होते हैं? Before going for an IPO, the employee of the organization get a right on a share, or the already holding equity shareholders get a right on the share to first subscribe it. That is a right. So if I give up that right, that is a transfer. Not using that right is also a transfer. Okay. Compulsory acquisition thereof under any law. Various laws have a provision of compulsory acquisition, especially when metros were built. The property which was coming into the route of the metro were compulsory acquired. So even if I'm not transferring or selling, but that is a compulsory acquisition, and the moment there is a compulsory acquisition, there is a transfer. Okay. Then owner of capital asset may convert the same into stock in trade of a business carried on by him. They are saying that conversion of capital asset into stock in trade is also conversion of capital asset into stock in trade. My capital asset was my jewelry. Now I have brought that same jewelry into my stock in trade. That is also a capital asset. Stock in trade means a capital asset is no more a capital asset. Now it is a stock in trade. That conversion is also called, that conversion is also a transfer, taxable in capital gain. Conversion of a capital asset into stock in trade is also a transfer, taxed in capital gain. Conversion, remember, if you remember, conversion of stock in trade into business asset was PGBP income. Take yourself back to section 28, where we discussed that suppose if you're converting a stock in trade, like I gave an example of builder, that you're converting your, you are a builder, you have building as your stock in trade, and now one of your building you're using it as a business asset. That conversion, उसमें fair market value was on date of conversion was my PGBP income. So now, how will you remember all these sections? This is the way. Try linking it with what you read. Try linking it. What was the contrasting thing there in PGBP, or what was there in salary? When I talk about PF, what happens when you're talking about employer? What happens when you're considering employee? Okay, this is how you will remember it. Okay, so coming back to next, maturity or redemption of zero coupon bond. Maturity or redemption of zero coupon bonds are transfer. That means whenever a zero coupon bond redeems or get matures, it means that it has been transferred. That means over. So उसमें capital gain आएगा. Then part performance of the contract would also deemed be a transfer. Part performance of the contract means there has not been a transfer on paper or a sale on paper, but I have given you a consideration, you have given me the possession. Performance of the part performance of the contract done. Now the only formality which is left is getting the sale deed registered, right? I gave you the consideration, you gave me the possession. Major performance of the contract done, right? Major performance of the contract done, right? So that would be the transfer. Even if a registration of the deed is happening later and all. Lastly, there are certain types of transactions which have the effect of transferring or enabling the enjoyment of an immovable property. If you transfer your right to enjoy that property, that is also a transfer. If you again recall, when we were discussing deemed ownership, I told you in the case of cooperative societies, a member of cooperative society is a deemed owner by a virtue of he being a member, because he gets that certificate of membership, and because of that, as that certificate of membership, they are allotted houses, right? So if I give up that certificate of membership, that means I'm giving my right to enjoy that immovable property which I have received, right? So that is also a transfer. So these all things are transferred. Now the point is, any gain arising from the transfer of the capital asset. Transfer to understand हो गया कि transfer cannot be only sale. It can be of various natures. It can be of various nature. It can cover exchange. It can cover relinquishment. It can cover extinguishment. It can cover compulsory acquisition. It can cover conversion. It can cover maturity redemption of zero coupon bond. It can cover part performance of the contract. It can cover giving up the enjoyment right also. So this all can be transferred. This all can be transferred. Clear? Capital asset into stock in trade. The example I gave of jewelry. घर का jewelry is my capital asset. Now I converted that into stock in trade. अब मैंने उसको there available for sale कर दिया. I'm a jeweler. That is conversion. Now, ma'am, okay, we understood this, but what is capital asset? You are saying transfer of capital asset, but please explain capital asset. Just like transfer is the definition is given under section 247. वैसे ही capital assets का definition is given under section 214. Section 2 clause 14. Section 2 clause 14 tells about what is capital asset. Everyone on the screen, please. Is this readable? Yeah. Now capital asset में क्या आएगा? What did they do? They said everything, every property. Abhi, think of any property which you see around in which is held by SSC. Whether it is a business property or not, that is not important. So abhi, if I'm seeing this pen is my capital asset, they're saying any property held by SSC is a capital asset. This speaker is my capital asset. The phone which I have is my capital asset. Any property is my capital asset, which they said abhi ki take, imagine the whole pool, everything is capital asset. Out of that pool they removed stock in trade. What would not be my capital asset? सबसे पहले stock in trade would not be my capital asset. Ma'am, stock in trade. So out of the whole pool they have now removed, पहले तो उन्होंने कहा everything is capital asset. They said everything is capital asset, but then they said okay, let's be reasonable, let's remove certain things from here. From that, what are not capital asset? Stock in trade. So stock in trade is not my capital asset because that is stock. So now if I'm into trading something, that stock is not my capital asset because sale of stock in trade is PGBP income. Okay. Then they said remove personal fixed item. Personal fixed item means anything, any movable property. When I talk about any movable property which is used for personal use. So now, unfortunately, this pen is also not a capital asset. I'm using it for personal use. This glass which I have, not a capital asset because anything used for personal use is not capital asset. So personal fixed items का उसने हटा दिया. Okay, but personal fixed को when they removed, they added 6 things. That 6 things from personal effect would be considered capital asset. First, what they did, they said everything is capital asset. Then they said personal effect is not capital asset. But then they said personal effects mean there are 6 exceptions which would be capital assets. Which would be capital asset. That कौन सा? Jewelry, archaeological collections, jewelry personal effect का है. right? It is for my personal use, but that would be a capital asset. Archaeological collections, that if I have some very vintage something archaeologically, that would be my capital asset. Drawings, paintings, sculptures, and any work of art. Any beautiful work of art if you have at your home, that is a capital asset. So not capital asset in stock in trade, personal effects. Personal effects like mobile phone. Mobile phone would not be my capital asset. Car would not be my capital asset. Why? Because that is for personal effect. So personal effect mein car, mobile phones would, or this furniture, this chair, not a capital asset. But personal effects mein these things would be my capital asset. Jewelry would be my capital asset. Archaeological collection would be my capital asset. Drawing, paintings, work of art, sculptures. These would be these 6 would be my capital asset. Clear? Okay. Now let's continue to our not capital asset wala list. Rural agricultural land. Rural agricultural land. Agricultural land kya hota hai? Where you do all that harvesting, sowing, seed, right? I hope you all know. But rural agricultural land is not a capital asset. Now, what is rural agricultural land? Any agricultural land which is not in urban area or is in rural area is an agricultural land. Then ma'am, what is rural area? Which I just told. Area which is not an urban area, that is rural area. Then ma'am, what is urban area? Area that is not rural area. No. So rural agricultural land is not a capital asset. So what they have done is they have told that what is an urban area. So urban area, if there is any agricultural land, that would be urban area. If there is any agricultural land, that would be urban agricultural land. That would be capital asset. Other than urban area, if there is any agricultural land, that would be a rural agricultural land. That would not be a capital asset. So let's assume what is an urban area first. Okay. Let us draw this. This area is our cantonment, municipal cantonment hota hai, every area has. So they say that this area, agar iska population, if this area's population is more than 10,000, more than or equal to 10,000, this area ka population, so if a municipal cantonment board ka area ka population is more than 10,000, then that area would be my urban area. That would be my urban area, because population के हिसाब से urbanization decide होता है, right? So एक municipal cantonment area का population if is 10,000 or more, that is an urban area. That means इस area में कोई भी land होगा, that would be an urban agriculture land. But at the same time, what they said, and drawing. Okay, they said कि अगर if this municipal cantonment board का population is 10,000 or more, that we all know, but is up to 1 lakh. The population is municipal population का ही area का is more than 10,000, but up to 1 lakh. So this area, municipal cantonment board ka area is urban area. But along with that, the 2 kilometer area from this municipal cantonment would also be urban area. This 2 kilometer area from this municipal cantonment will also be urban area. So this, agar iska population is up to 1 lakh, so ye to area urban area hai, but this area also would be urban area. So any land here would be urban agricultural land. Okay, clear? Chalo. But now they say add effort. Better. Then they say कि अगर if this area municipal cantonment का population is more than 1 lakh but is up to 10 lakh, then this area along with that this up to 6 kilometer area from this municipal cantonment in all directions would be an urban area. So again, jitna population बढ़ रहा है, the corresponding area around that municipal board is coming under urban area. More the population, the corresponding area along that or the adjacent area along that municipal board is also coming in urban area. Clear? So last, if the population of this cantonment is more than 10 lakhs, if more than 10 lakhs, then municipal cantonment say 8 kilometer ka area all would be urban area. Anything beyond that 8 kilometer would be a rural area, provided wo kisi aur cantonment mein not cover ho. Anything beyond this 8 kilometer would be in a rural area, provided that is not covered under the 6-8 kilometer wala range of any other municipal cantonment. Okay? So to repeat, rural agricultural land would be any agricultural land which is not situated in an urban area. Urban area is an area where the municipal cantonment population is up to or more than 10,000. Along with that, if that municipal cantonment population is more than 10,000 but up to 1 lakh, then 2 kilometers ka area would also be an urban area. More than 1 lakh to 10 lakh, then 6 kilometer ka area would be an urban area. More than 10 lakhs and 8 kilometer ka area would be an urban area. And any land here would be urban agricultural land. That is a capital asset. So if I have to do this question with you, one second. Sorry. Yeah. So if I have to take this question, can you be able to tell me what is the urban area or not, or urban agricultural land or not? So if a land is within 1 kilometer and the population of that cantonment is 9,000, will this be a rural agricultural land? The answer is yes. Would this be a capital asset? Obviously, no. So questions says if this is, see what the question is asking, whether it's asking rural agricultural land, whether it's asking a capital asset. So let's see whether it's a capital asset or no. The answer is no. The cantonment population is 1.5, is 12,000. The land within 1.5 kilometers would be an rural agricultural land. No, that is not a rural area. That is not a rural area. That means it's been an urban agricultural land and hence it would be a capital asset. Similarly, cantonment population is 11 lakh. Obviously, the land up to 8 kilometers goes to be an urban land. So hence it's a capital asset. Similarly, please do it till 9th. And if there's a query, let me know. You have 1 minute to go through. Shwang, weightage of capital gain is very high. I mean, it's a very, very, very important chapter. 20% लेके चलो. Nidhi, is it clear? So someone is telling that you have already done this in chapter 3. Okay, interesting. I hope. Now coming back to our definition of rural capital asset. So I told you capital asset में क्या क्या आएगा? Capital, everything is capital asset except personal effects, except stock in trade, except rural agricultural land. Correct? Yes. Yes. Also except gold bonds. There are certain rates of gold bonds. Those would not be part of your capital asset. Gold bond 6%, gold bond 7%. Every now and then, sometimes government comes with central government issues bond. National defense gold bonds. All of these are your are not your capital asset, and also interest on these are also exempt under section 10(15). Gold deposit bond scheme, gold monetization scheme, उसमें भी if there is any bonds issued, that would also not be your capital asset. What is important for you to remember is 1, 2, 3. Clear? Chalo. Is capital asset definition over? No. Capital asset, I told you, everything is capital asset which in SSC helps except these things. But there are two things more. Stock in trade is not a capital asset, but when we talk about this at your level is not important, but you should know. When we talk about financial institutions, FIIs, foreign investor institutions, FIIs, for them, equity, because they are into trading, like they are into trading equity or securities, are stock in trade. I told you, if your nature is of trading every day, that is your business, and that hence that's your business should be your stock in trade, correct? So that is your stock in trade. But specifically, it has been mentioned. Specifically, it has been mentioned for foreign institutional investors that their equity and securities, even if it is in the nature of stock in trade, would be the capital asset, would be a capital asset. So only exception is for foreign institutional investors, that if they, even if their securities they deal on everyday basis, their security which should have been the stock in trade per se, but as per our definition of section 2 clause 14 would be my capital asset. Clear? Along with that, a latest amendment which has come is for ULIPs, unit linked insurance plans. Unit linked insurance plans. So they say if any ULIP is issued on 1st February, on or after 1st February 2021, on or after 1st February 2021, and please listen carefully again, any ULIP is issued on or after 1st February 2021, and the premium paid during the year. Premium unit linked insurance plans are the plans which gives you insurance also and which gives you certain units also. Okay, so if the premium paid during the year is more than 25 lakhs, 25 lakhs, I'm saying it's more than 2,50,000, then that ULIP would be your capital asset. Then that ULIP would be your capital asset, provided that ULIP is issued on or after 1st Feb 2021. Okay, on or after 1st Feb 2021, then that ULIP would be your capital asset. But if the premium is not more than 2,50,000, if the premium is not more than 2,50,000, but I have invested in 2-3 ULIPs, I have invested in 2-3 ULIPs having a premium of less than 2,50,000 individually, but aggregately they are crossing 2,50,000, then also ULIP would be my capital asset. An example, so if I took first ULIP, which had a premium of 1 lakh, and second ULIP I took during the year which had a premium of 2,50,000. So both of these would be my capital asset. Both of these would be my capital assets. In aggregate, sorry, not 2,50,000, 1,50,000. Both of these would be my capital assets. So in aggregate, if I cross 2,50,000, or one premium at individually crosses 2,50,000, in both the situations, ULIP would be my capital asset, provided those ULIPs are issued after 1st February 2021. Clear? So with this, we understand our concept of capital asset. We understood our concept of transfer. दोनों में से किसी में कोई doubt? In respect of these two, any doubt? Actually, this chapter will not go as per the flow of your module. We will go some 1 minus plus idhar udhar, okay? Sure. I mean, B point distance is 9. Ma'am, not yet. Okay. Ma'am, in B point distance is, let me just know. Cap gain is also, student, it is very, very, very important chapter. These two chapters are your base. PGBP and cap gain are your base for your final. If you get the concept clear at this stage itself, going forward, thoda sa there is complexity, it would be easier to grasp it. Okay? And PGBP and capital gain are two of the most scoring chapter for your intermediate level also, inter level also. So we have point D, and point 9 as query. I'll come to that. So if Rohan says, if ma'am 2 ULIPs of 2,50,000 and other of 150, then both will be my capital asset or one. Interesting. This would be my capital asset, 2,50,000 wala, other wala nahi ho. Because 250 got taxed, other wala ko in aggregate. Why aggregate wala provision came? Because again, once the amendment comes into picture, people start planning out, people start taking loopholes. Now let's invest in chote wale se. If ULIPs are bought before 1st Feb 2021, then the point which has to be seen is they are not the capital asset because they are personal linked insurance. Personal insurances. After wale pe, Mansi, only after wale pe you will see the treatment. Okay, on agriculture, we had query on point 9, point B, and point B. Quickly on the agriculture part. Point B may, okay, population is 12,000. That means 2 kilometer tak ka area would be urban agriculture land, which is in this case 2 kilometer ke andar aa raha hai. That means it's a capital asset. The heading is whether it's a capital asset or not. That means whether it is a urban agriculture land or not, right? So if yes likha hua hai, that means it's a urban agriculture land. Next is point D, 80,000, more than 10,000, up to 1 kilometer, more than 10,000, but up to 1 lakh. That means only 2 kilometer wala area would be covered. Hence 3 kilometer wala area, 3 kilometer, only 2 kilometer wala area would be considered for urban area. Beyond that would not be an urban area. Beyond that would not be an urban area. Hence, this is not an urban area. Hence, not a capital asset. Hence, equal to rural agricultural land. And point 9. Population is more than 10 lakhs, but up to 8 kilometer wala area is only covered under urban area. Hence, 9 kilometer is not urban area. Hence, it's a rural agricultural land. Part performance वाला transfer कैसे होगा जहाँ पे essential performance has been done. Essential performance has been done. Basically, just I give an example. I have given you the whole consideration. You have given me the possession. Now there is just a formality of getting a registration, right? Paper transfer is just a formality. That is part performance, and that is the moment all those things are done, us din it is assumed that the transfer has happened. So let's begin. Yeah. Now capital asset is cleared. Capital asset is clear. Transfer is clear. Now we move forward to understand what is a long-term asset and what is a short-term asset. Can I have everyone on the screen, please? Yeah. There are two types of asset when we talk about capital assets. Capital assets are categorized in two types. One is short-term. Another is long-term. Short-term capital asset and long-term capital asset. Short-term capital assets, you get short-term capital gain. Long-term capital assets, you get long-term capital gain. But how you divide this? How do you divide this with which asset would be short-term and which asset would be long-term? So students, short-term may, we have to divide, we have categorized our assets into three parts. First part is when we talk about security other than unit. Other than unit means other than any unit or equity shares listed in recognized stock exchange. Let me just, instead of typing, let me just come here. When we talk about securities other than units listed in a recognized stock exchange. So preference shares covered here, listed on a recognized stock exchange, equity shares covered here. Unit of equity oriented funds, unit of UTI, and zero coupon bond. So zero coupon bond always will be a short-term capital asset, mostly. Okay? So if these three assets are held for a period of 12 months or less, for a period of 12 months or less, they would be a short-term capital asset. If they're held for a period of more than 12 months, that would be a long-term capital asset. So for a period of only what? Securities, unit of equity oriented fund, and zero coupon bond. If held for a period of 12 up to 12 months, then short term, more than 12 months, long term. Now, unlisted shares. Unlisted shares means the shares which are not listed on stock exchange. So unlisted preference shares, unlisted preference shares, unlisted equity shares, and land or building or both. Land or building or both. If held for a period of up to 2 years or 24 months, up to 2 years means 2 years is also included, then short term, otherwise long term. Then unit of debt oriented fund. Unit of debt oriented fund, which was not covered here. Other than unit likha hua hai. Unlisted securities other than shares. Unlisted securities other than shares. Other capital assets like jewelry, sculptures, all of these things which we discussed. Agricultural land would go here. These is the holding period if up to 3 years, then short term, more than 3 years, long term. Clear? Up to 3 years short term, more than 3 years, long term. Okay, clear? Chalo. Now let's proceed with understanding of period of holding. A holding period कब से लोगे? Obviously from the date you own it to the date you transfer it. Correct? Holding period ये 12 months का लोगे कब से? This is if your holding period held But from when you will take this held ka period? From the date you own it, from the date you become the owner to it, to the date you transfer it, correct? From the date you own it to the date you transfer it, that is the holding period. But there are certain specifications where the holding period changes, मतलब you don't know कि holding period उस case में what would be the holding period for, or whether you may have a confusion of where to begin with or where to end it. Where to begin with or where to end it, you may have certain confusion over it. So that is cleared by our explanation to explanation 1 to section 242A. Let's understand it. What did I say? Generally, from the date you own it to the date you transfer is your holding period. But yes, there are certain situations when you don't know what period has to be included, or when is my starting date or when is my end date. So let's understand those typical scenarios. So when I talk about shares held in a company in a liquidation, अब company liquidation में चला गया, So starting point is the point to calculate the month period. Starting year or calculating holding year, starting is the time where the shares are allotted to me, right? But when to end it? The company has gone into liquidation. So the date of liquidation, till the date of liquidation, I will calculate my holding. Asset becomes the property of an assessee by virtue of section 49(1). This will go in detail, but just to make you an understanding, we'll obviously do this. This section is very important. This section covers sections like gift. If I've been given anything in gift is given to me. So my holding period will not start from the day when I got the gift. It will start from the date when the person who has given me the gift owns it. From the date when the person who has given me the gift owns it, from that day till the date of transfer would be my holding period. If student this is not understood, that is not a problem. This would be clear once you do section 49(1). Don't worry. Where inventory of business is converted into or treated as a capital asset by the assessee. अब क्या किया हमने? I told you कि capital asset में when you are converting inventory into capital asset, अपनी inventory को you converted into capital asset. So अब take a situation in your mind. You are a jewelry dealer. ज्वेलरी जो आपका स्टॉक एंड ट्रेड था, उसको आपने ज्वेलरी कैपिटल एसेट बना दिया. सो अब इसमें होल्डिंग पीरियड कब से बिगिन होगा? जब से इन्वेंट्री हेल्ड किया था? नो. From the date of conversion, holding period would be considered, and when you will actually transfer that jewelry, till that date you will consider your holding period. What did I say? यहाँ पे from the date of conversion, your holding period will begin for this capital asset. From the date of conversion, your holding period will begin for this capital asset till the time you'll actually transfer that capital asset. Clear? Next. Amalgamation pe will come. Right shares pe I will explain abhi. Right to subscribe pe I'll explain abhi. Financial assets demerger will explain separately. All these topics will be explained separately. Don't have to worry. Come to this question on your screen. How will you calculate the period of holding in case of the following assets? Shares held in a company in liquidation. Shares held in a company in liquidation. So you will say the period after the liquidation shall be excluded for calculating the period of holding. Therefore, the period of holding shall commence from the date of acquisition and end with the date on which the company goes into liquidation, which we discussed. Bonus shares are the shares which you get free of cost. Uska period of holding कैसे recognize करोगे? From the date of allotment till the date of transfer. Flats in cooperative society. Flats in cooperative societies. How do you get flats in cooperative society? from that allotment of membership or share of that cooperative society. So from the date of allotment of shares in the society till the end of the transfer. Simple. Clear? Chalo. So section 45 general provision is clear. Then section 45 ka general provision is clear. Section 214 clear. Section 247 clear. Period of holding section 242A clear. Explanation to that we have covered certain explanation. Rest we'll start when we'll discuss the topic in detail. Okay. Do you want me to leave you here, or can I just do one more thing? Let me just do one more thing, then we'll proceed. How do we actually calculate capital gain? So the computation of capital gain is given in section 48. Given in section 48. Section 40 talks about how do we compute capital gain. Just PGBP ka there is a format, add admissible deductions, reduce admissible deductions, add back disallowances, right? House property ka there is a format of calculating gross annual value. Salary mein there is a format of calculating all perquisites ka value, allowances ka exemption, add them back. Section 48 tells about how to compute capital gain. How to compute capital gain. So you take full value of consideration. Now, here in all the cases, think yourself as the asset owner. You have an asset, then only you will understand it. You will get full value of consideration on transfer. You will reduce from it the transfer expenses like brokerage and all. You will get net consideration. You will get net consideration. Yes. From this net consideration, you will reduce cost of acquisition. Cost of acquisition. From this cost of acquisition, you will also reduce cost of improvement. Cost of acquisition, may say you will also reduce cost of improvement. Whatever would come would be your capital gain or capital loss. Capital gain or capital loss, and would be short term or long term depending upon the period of holding, depending upon the period of holding of respective assets. Clear? This is how you calculate the capital gain. But in case of certain long-term assets, except few exceptions, this cost of acquisition and cost of improvement gets indexed. Why index? Indexation का concept क्या है? Students, property is something which you people are great grandfathers are holding for a longest period of time. Say they're holding it from 1960, 1970, right? Or उस time पे अभी भी we hear it from our from our parents or grandparents that this property was just of 4 lakhs, right? Just of 4 lakhs. And today the value of that is, say, suppose 2 crores or 3 crores. So now if by that logic, if I go and sell a property of 3 crores and I'm getting cost of acquisition as only a deduction as 4 lakhs, so 2 crore 96 lakhs I have to give the tax, which is not the situation, because that 4 lakh is the value as per that period of time. 2 crore is the value as per today's period of time. So to bring it at par, I have to bring that 4 lakh ka value for today, 4 lakh ka value at today's price, right? Tabhi to there would be some comparison whether there is a gain or loss. I cannot compare a value of some other generation to today's value. So to bring that 4 lakh cost at today's price is called indexation. Indexation happens when you're adjusting the cost inflation, the inflation impact on your value. How you do it is what we have to see, right? Is what we have to see. So I will just tell you a hint of it, but we'll pick it up here in the next class from this indexation point only. From this indexation point. How you do it? You take your cost, you divide it by the index of the year in which you acquire. Everything would be given to you in question. and you multiply it by the year of index of transfer, as in this index of transfer. For that, in this indexation, we use the word CII, cost inflation index. So cost inflation index of transfer year, cost inflation index of acquisition year, unitary method. This price was when this was the index. What is the price now? Divide by this into this is indexation. You that indexation for improvement and you do it for cost of acquisition. Students, remember, higher the cost of acquisition, higher the cost of improvement, lower would be your profit. So you will always be in a situation where you want to reduce your profits to show it for taxability. So you will prefer a higher cost of acquisition, you will prefer a higher cost of improvement. What is cost of improvement, ma'am? Cost of improvement is basically what addition you have made. One is the cost of acquisition, right? But what is improvement is what addition, capital addition you have made. So for example, I think the best example which comes in my mind is when I purchased a house, the building was of 1 floor. The cost of acquisition would be obviously for 1 floor, but now I have built another 2 floors on that. That is cost of improvement. The cost of other 2 floors is cost of improvement. And when I say I am selling all the 3 floors together, that would be my full consideration for 3 floors. This is just an overview of what we have to come up in the next 2 classes about capital gain. So be prepared. There are lots and lots of concepts and lots of financial terms which you need to be clear of. Amalgamations, demergers, right shares, bonus shares, entitlements, all of these things, partnership, which you need to be taken care of. Just 1 second. Needs to be taken care of. So I'll leave you on today with this. Have a good weekend. Enjoy. And Sushil, I think happy Holi for those who are celebrating today. And I hope you had a great Holi for those who celebrated yesterday. I hope everyone have a colorful year ahead, a bright and a colorful year ahead. Any other question which you have? Indexation ke liye students, abhi we have not I have not dived into indexation topic. I've just told you that this is the indexation ka concept. Indexation, how we do it, when we do it, for what period we do it, from where we do it, all of that would be we taking up. UTIs are called UTI के plans होते हैं, UTI के units होते हैं. Equity oriented funds क्या होते हैं? Equity oriented funds होते हैं where any fund in which you invest, and that fund is investing up to 65% of their proceeds into an domestic company ke shares, or if they're investing into any other fund, and that any other fund at least 90%, and that any other fund is further making an investment in equity or shares of the domestic company, that is equity oriented fund. Pooja, don't worry, I just touched the topic of indexation. Indexation अच्छे से we'll start in detail from the next class. Okay, so see you in the next class. By that time, please cover your PGBP and read the capital gain ke sections which we discussed. Okay, bye.